Okay. For those who are tuning in, you guys know my name as Adam. I had to click that off. My government, my whole government was on there. It was that was me. That's basically how you keep track of your forex journey. You can sign on to that and see how you're making out on along your forex journey. I just want to make sure that everything is going all right. Everything is good. All right. Welcome to the class. This is the first Forex training class that I'm having. Um, I'm gonna teach you everything that I know, and it's gonna be a straight through video. It's gonna be straight to the point. There's gonna be examples that I'm gonna give, and that happened in past, in the past tense and all that stuff. And I'm literally gonna go straight through, literally how I want to groom like you guys how to trade. So when you will start looking at the charts, you won't be intimidated by seeing all of this. Because that's why, a lot of people see candlesticks and they see a chart and a graph and all this stuff and all that, like that stuff, like all of this is nothing, right? But what to do with this is something. Excuse me. All right. So this is basically what goes on. You have price on the side and you have time on the bottom. All right. You have the time and you have price. These two things right here, time and price, notice how I say time and price. Time and price are the most important things when it comes to trading the Forex market. So now let me give you a breakdown of what the Forex market is. Forex market is basically real time, real currency being traded on a live market. Okay? Real money being traded between two currencies live on the real market. All right. So now I'm gonna label some of the Forex pairs and then I'm going to right? So let me just start off with the Forex pairs, and then I'm going to start going into each, going into how the pairs correlate first, and then we're going to get into the actual chart. All right. And then I'm going to label some ground rules. All right. So actually, first and foremost, let me get this out the way. Disclaimer: you're entering a different world. Literally, you're entering the real world, I should say, the real world. You're going to be tapping into some stuff that the normal, average person, the normal, average people in today's world that you're currently living in, right? Because all the stuff that you're seeing right now, there's a reason why when you look at the news, something happened and then you see like a little effect on the market. Like you wouldn't understand that now, but going forward from this point on, you're going to understand a lot of things. Why things are the way they are. You're going to change the way you see things. You're going to change the way you act. You're going to change the way sometimes even making decisions, mostly financial decisions. You're going to start, you know, being able to separate yourself from the world that you're currently living in now and actually tapping into the real world. The real world. All right. So let's get on to it. Now, the disclaimer: I am not responsible for anyone who wants to learn. You wanting to learn, you're doing this on your own will. My results and my past results is not guaranteed for your future results. Okay? Whatever I do and whatever I show you, you might not be able to see and you might not be able to perform as good as me or maybe even better than me. When you invest into this market, you're investing solely on your own will. Everything that I teach is for educational and entertainment purposes. Okay? But I'm going to teach you everything that I know. All right. So I had to get the disclaimer out there. You're taking your own risks. You're going into the market. You're stepping into a whole new world. Let's get into it. Now, lesson number one: currencies, currency pairs. Please screenshot, take notes, everything. Whatever I say, write down or stop the video and screenshot it. Please do that. All right. So currency pairs. Currency pairs, they're they're different. They're literally what it is. It's currency pairs, right? All right. So actually, you know what? I'm gonna just keep it at keep it at 12. You guys can see it. You guys can see this part. This is the part that I actually want you to see. Currency pairs, right? Now, currency pairs are two pairs trading against each other on the market. It's not trading against each other. There are pairs that are one versus yeah, basically trading against each other. So basically, if we have the biggest pair that a lot of people know is the Euro USD. Euro USD is the Euro dollar versus United States dollar. Okay, that's exactly what it is. Now we have GBP USD, which is the Great British Pound versus US dollar. Okay. And then the pair that we're going to be looking at today is the US dollar versus the Audi dollar, Aussie dollar versus the US dollar. You have uh, US dollar versus the Canadian dollar, US dollar versus Canadian dollar. Oops. Um, mm, we have GBP versus the AUD. Matter of fact, we just gonna I'm gonna just label different currency pairs, and then just you can take the currency pairs as so, and you can put it alongside. So you have the GBP versus the AUD. So you just go Great British Pound versus the Aussie dollar, and then you have Euro AUD. You have a bunch. You have a whole bunch. But I'm a label the majors. All right, the majors that people trade. So Euro USD, GBP, JPY. Now this is Great British Pound versus Japanese yen. Now you have Euro JPY. You can take the Japanese yen, JPY, Japanese yen. You have XAU USD. Now XAU is a metal, so the XAU is gold versus the US dollar. And then you have the indexes. So the indices are US 30. You guys see me trade this a lot of times. You'll see. This is the Dow Jones. You have US 100. Oops. US 100, which is known as NAS 100, which is the NASDAQ. And you have SPX, also known as SMP. S, where are you? SMP, and that's the SMP 500. There's a whole bunch of currency pairs. If you type it in, it will come up. And then the DXY. We'll get more into the currencies a little bit later. These are the majors that I noticed, but I mean that I put up. But DXY is the dollar index, the US dollar index, US dollar index. Okay. This is probably the most important one. Now I'm going to explain why. Right? All right. Now the reason why the DXY, right? We are now looking at the DXY. Excuse all the stuff that's going on. You'll see that yeah. Okay. Well, all right. DXY is very important. And the reason why it's very important is because it's what moves the US dollar. It's the dollar that's represented in all currency pairs. So if we go back to to USD, Audi USD, Australian dollar versus United States dollar, and we just go look at what I typed in here somewhere. Wow, I didn't save it. Oh my God. I hope you guys guys save it. I hope you guys go back in the video and save it. All right, all right. So let me see. I probably did. So I didn't close it. No, I didn't. I didn't save it. All right. So let's go back to the DXY. DXY. All right. Look. Oops. Don't want to do that. Don't want to do that. The DXY is the strength of the US dollar. So basically, if we're looking at anything versus the US dollar, right? So say we're looking at AUD versus the United States dollar. You see how on this time frame, you're on a 4 hour time frame, and I'm gonna go through the time frames later on. But look at how the US dollar is going down. And when we go on AUD USD, it's actually going the opposite way. It's going up. Okay. Let me just put this on a watch list. This is gonna be our it's gonna be our go-to. Okay. So you see how the dollar was going down from up here and the AUD USD is going up because it's the opposite. If the dollar is going down, that means anything versus the dollar is going up. Okay? We could change the graph to any type of thing. We could change it to the line. It's still going to be the same. All right? And matter of fact, I should just put it as the line right now, just to so you don't feel overwhelmed. So if the dollar, right? We're gonna go back to the dollar. If the dollar is going down, right? If the dollar is going down, what do you think the Euro USD is gonna do, right? Remember, USD is on the back end. If a USD is in the front and the dollar is going down, and to say we're looking at USD CAD, right? Let me just do that real quick. Let's look at USD CAD. If the dollar's going down, what do you think USD CAD is doing? It's going down, right? It's going down. If the dollar's going down, what is the United States dollar and the Swiss dollar doing? It's going down. Now, if the dollar is going down, what is the Euro USD doing? It's going up. It's going up. Audi USD, AUD USD going up. Ah, there we go. Please take a picture of this. Take a picture. Let me take that off. All right, take a picture of that. Screenshot it. Do what you need to do, please. Okay. Now here's another rule. So this is what I'm gonna write. DXY correlation. If I misspell it, I'm sorry. You guys know what I'm saying. All right. XXS USD. Right? And USD XXX. If the DXY is bullish, which means going up, XXX USD is bearish. Bearish going down. If DXY is bullish, right? That this is this is for XXX USD, right? If the DXY is bearish, then XXX USD is going is bullish, going up. Okay. So if the DXY bullish is, which means going up, that means the opposite is going down. If DXY is bearish, then the opposite is going up. Okay. DXY, this is for USD XXX. All right. DXY is bullish, then USD XXX is bullish. DXY is bearish, then USD XXX is bearish. And I know we didn't get into the JPY and the metal and gold and the indices, but I really want you to focus on the currency pairs. Just, you know, I really want you to focus on these pairs right here. Euro USD and USD CAD. These two. You focus on these two first, and then later on we'll get into more of the actual how the other pairs work. Okay. So let me I want you to let me edit this so I can just say focus on these two. So you can take a focus on these two pairs. And it's getting hot. My little fan. All right. So now just take a picture of this. I'm going to scroll over. That was funny. That was from a different video. Okay. Take a screenshot, please. Just do that for your boy. Okay, so now that we have that, let's get into the charts. Okay, I just need to check on my trade real quick. All right, yeah, so we're doing good. All right, just want to keep glancing at it real quick. Okay, so now that we have that, you know what? Let's go on Euro USD, and I'll probably use this chart. Okay. Now let me, since I don't really trade Euro USD anymore, I can, to bigger, better things. Let me stop. Anyway, let's clear this up and turn it back into the candles. All right. So before we even look at the candles and all that stuff, right? Just take a look take a look at, let me go to the 15-minute time frame. All right. Let's take a look at the chart, right? And notice how fast price moves at these times. All right. You see price just moving. You see price did this spike. You see price did this crazy buy right back up. It was actually today. That was actually yesterday and today. Okay. All right. Look, time and price are the most important things that you will have to know in this trading journey. All right. Time and price. Time before price. Time is the most important part, then price. Okay. So it's time down here and then price. All right. Time is important because is when time dictates when the market moves. Okay. We can see right here by 3 in the morning, we had sudden movement, right? And then 3 in the morning, we had sudden movement. And then you see around 8:30, we had sudden movement. Two, three, yeah, between 2 and 3 sometimes, but two, sudden movement down, right? Three, sudden movement, right? Sudden movement up, and then it came back down, right? This is 10:30-ish, sudden movement going up. And then again, two, we had this spike up, 3:30, came rushing down. And let me see, 8:30, 8:45, we had the run up. And then we had a little movement down, right? And then again at 3, we had a rush down and then a buy back up. Let me label the specific times. In trading, right? Notice we didn't even get into the actual chart yet. But in trading, time, and I'm going off of New York time because that's the time zone I live in. But it, you should set your you know your trading view. I'm gonna give you guys the website to this website soon after this video. Obviously, it's free to sign up. You sign up, it's free, and then once we do that, I'm gonna send you a video on how to operate TradingView. Okay. So just make sure. All right, trade good, trade good. These are the times that you would like to look at the charts. London session. People say it's 3. Yes, it's 3 in the morning, but I like to look at pre-London. So pre-London is 2 a.m. and 2 to 6, right? 2 to 6 a.m. is London open. Gotta be professional. Sorry. Um, New York session is really 8, but I like to look at the pre-New York session. So New York is 7 a.m. to New York Open is between 7 a.m. to 10 a.m. London close is between 10 a.m. to 11 a.m. and New York close is 2 p.m. to 5, 5 p.m. and then the market close. Asia session is 6 p.m. So basically it's midnight. Okay. But the area of focus is literally between 8 p.m. and 9 p.m. Special time. Special time. Okay. What we like to do is we like to look in between 2 to 6, 7 to 10 for entries in the market. Basically, anywhere between 2 to 4 would be the time that you would like to enter. But because there's news events that can take place at 4:30, sometimes 5, even 6 o'clock on during the London session, you could see a move. You could see movement happen, crazy movement that can happen between 2 and 6 in the morning. And the same thing with New York. New York, you can see a lot of movement between 7 and 8, but usually between 8 and 10, you will see a lot of movement. Okay? All right. So take a take a picture, screenshot it, write it down, pause the video, write it down in your own notes. And now we're about to get into the charts. Okay. First things first, I'm gonna teach you straight. I'm not gonna exercise candlesticks. I'm not gonna show you what candlesticks are. I'm not gonna they're candlesticks are the tool that we're using to measure price. Boom. Price movement. Candlesticks is the tool that we're gonna use for price movement between time and price. It's a tool that we're gonna use. That's all you need to know right now. Okay? Because as your journey grows, you're gonna understand. So before we get in, I'm gonna teach you what an imbalances. Shortcut way, beautiful, straight to the point. Imbalance is an inefficiency in the market. I knew I spelled that wrong. I don't even. No, that's not. That's not. That's probably wrong, but it's all right. Inefficiency in the market, right? That causes a gap in the market between three candles that eventually has to be filled. It doesn't have to be filled right away. It doesn't have to be filled today, tomorrow, next week. It could be filled in a year from now, but it has to be filled at some point. Okay, to be filled at some point. We're gonna look at those in a second, but I want to get these um these defos out of the way. All right, because it's gonna stretch across the screen. I don't like that. I hate that. So what I'm gonna ask you to do is once I type these, please freeze the video, screenshot it, or write it down yourself, please. Thank you. Order blocks. Order blocks are levels in which price runs away from, leaving a footprint where the banks have entered a buy or sell position that eventually will be mitigated. Price levels. Price levels. You're like, what, Adam? Price runs from all over the. Yeah, you see, I see it. I know price, but you will see. You would gain the concept in a second. You will see what I'm saying. Okay. And last but not least, liquidity. Liquidity is a pool. No, no, is an area in which price is fueled in seeking once an area has been left. Once an high, oh, I should say it like that. Once a high or low hasn't been touched or taken, is an area in which price is fueled in seeking once a high or low hasn't been touched or taken. Here we go. And I'm going to show you that in a few. So please, please take a pause the video, take a screenshot right here, and then pause the video and take a screenshot right here. So you can have this. Okay. Maybe I can put it on top. Yeah, right there. Okay. Okay, cool. Now we have price up here. Remember, between three candles, right? First, all right, first we're gonna look at, I'm sorry. Let's see, first thing we're gonna do is look at an imbalance. All right. We're gonna look at imbalances first. Price between price a price gap between three candles that aren't touching. Okay. So for example, this right here is an order block. I mean, not an order block. I'm sorry, an imbalance. You see the space in between this candle and this candle? There's an opening space in between here and here. That's an imbalance. Here's another imbalance. The bottom of one candle and a space to the third candle. This whole space is considered an imbalance. This whole space. This space from that third candle, from the first candle to the third candle. This is an imbalance. Okay. Let's look for a bullish one. All right, here goes one. From this small candle to the bottom of this candle, this space between this candle and this one, that's an imbalance. And then this right here is an imbalance as well. This space between there and this candle here. This piece is considered an imbalance. Okay? You take that and you can, there's more, there's obviously more. Okay? Now, the next thing that we're going to take a look at are order blocks. Okay, there's different types of order blocks, but we're going to focus mainly on one type right now. And let's see, I want to go on the hour chart because they probably show better. Okay, an order block is, I know what I said earlier. That's what we call it. That's what it is. But an order block on the chart is labeled as the last up candle before the down move and the last down candle before the up move, right? the last down candle before the up move, and the last up candle before the down move. Okay? There's a lot of significance in this. All right? This right here, this right here is an order block. This white candle, which is the down candle before the up move on your chart, when you first open up your chart, is going to be a red candle for the down candle and a green candle for the up candle, right? The last up candle before the down move. This is a big one. I don't like that one. Some people do body to body, wick to wick. Some people do body to body like that. Some people even do wick to wick. Some people just do the wicks, and I'm gonna explain that another day, right? That's gonna be another time when we get more precise, right? Um, Let me find another order block. Another order block would be this here, last down candle before the up move. You know what I'm saying? Last down candle before the up move. Not all order blocks are strong, by the way, but you'll be able to target which ones are strong and which ones aren't. And these are the ones that there's different types also. So you have the regular order blocks. I'm gonna teach you the breaker breaker blocks, right? Look at that big imbalance candle. Let's see what else. You have different order blocks, but the ones that I want you to learn now are the major ones. The last down candle before the up move. This right here will be considered a bullish order block. Now, the the last down candle before the up move, that's a bullish order block, right? And the last up candle before the down move, that's a bearish order block. That means you're expecting price to go lower if it hits, just like this. And then let me just say, I'll be able to come in here, take this, bring it across. Just want to show you how precise this is. And then be able to hit a sell on here. Right there. Once you learn stuff like this, you'll be able to do this. And then ride it to the next low, which was here. Wow. Look at that. Cleared it. And then See this? You take the same thing, eventually take this and take that buy right back up to this high right here. And look, wow, you cleared that. You see how precise this is just by using the regular order blocks. So don't think that I'm selling yourself short. This is just the beginning, right? This is just the beginning. I'm not I'm just showing you what is possible by using just regular order blocks. All right, even this one would have been good too. It wouldn't have went past the high, but there's ways of telling how which way to take it. So the trader is going back the other direction. It's all right. All right. I didn't enter again, did I? No. Okay, good. That was a mistake. That was a mistake. A really bad mistake. Okay, so let me clear that. And now we're going with liquidity. So liquidity is an area in which price is fueled and seeking once a high or low hasn't been touched or taken. So price, as you can see, there's liquidity. There's liquidity here. There's liquidity all along here. There's even liquidity under. There's liquidity here. There's liquidity here. Liquidity is basically money. That's what liquidity is basically, money. The market is out here seeking money. Notice how every single time I put a line across something, right? I put a line across, price has gone above it and then sold, and then either sold off or it went higher, right? So price came up, wiggled down, left these two highs the same, perfect, like around perfectly around the same. Came down, took liquidity at the first low, right? Took liquidity at the first low. Wow. Then price went back up, took liquidity here. See a high that hasn't been taken. Wow, there's liquidity. This high has been taken, and now it went back, and it took liquidity here. Then what did price do? Go back up and take liquidity from up here. to then sell lower and take liquidity from down here. You see, price gets fueled off of taking liquidity, right? Liquidity points are everywhere, right? They're everywhere. It's a high, you know what I'm saying? It's a low. You know, at one point, this was liquidity. It was taken. Then this was liquidity. This has been taken. There's liquidity here. That has been taken, and so on. You see how it just took liquidity? I didn't even look at it. Just now, I just didn't see it. I knew it was going up. Wow, came back down. Wow. Okay. So if you this is just the first lesson. This is literally just the first lesson. Now, another thing I wanna teach on this lesson now. It's gonna be the last thing for right now. Right? Right now, if you can see, this is the uptrend going down. When you see the market going like this, that means we're in the uptrend. When the market is going down, market will move like this. This is a uptrend. This is a downtrend. All right. So when the market is going up from here, you see how the market is going up, up, down, up, down, up, down, up, down, up. That means that we're in an uptrend. Okay. When you see the market going down, up, down, up, down, up, down, up, down, that means that market is in a bearish trend. It's on a downtrend. All right. Market would do that for as long as it has to. All right. All right. So I'm gonna put the link in the description below for the website that I'm currently on. All right. Again, it's free, right? It's free. It's called tradingview.com. It's free and it doesn't cost no money. Only thing you need to do is just use your email address. You can sign up, make an account. It's free. And then, you know what? You can do it like this. You sign up, make an account, right? It's going to bring you to gonna bring you to this page right here. All right, let me just let me go to let me go here. Let me go home. Excuse the slowness. No. Okay. What you're gonna want to do, right, is come here and you're gonna go to markets. You're gonna go to markets, and then you're gonna go to Forex, and you're gonna go to, I believe it's the Americas. Actually, you know what? No, no, it's not that. Products. No, it's not products either. You know what? Let me do it this way. TradingView.com. They give you everything on here. A lot of news, summaries. Obviously, you saw that. I'm gonna try to see if I can. So it's gonna, yes. So basically, it's gonna say indices, stocks, crypto, forex. You're gonna click forex, and then Euro USD is gonna be right there. You click it, and then you're gonna say see on supercharts. Okay, it's going. That's exactly how it is. Now to add, actually, you know what? Let me just even start off by saying it like this. Every chart that I use, because they have different brokers with different charts on here. The charts that I use are always the Forex.com. So if you see a chart pop up, just type in EURUSD, right? And click the Forex.com one. We're always going to be using that. That's the chart that we're always going to use. Forex.com charts on trading. Okay. Until we get to the metals and indices and stocks and stuff, because it works. What I'm teaching you here is it also works with stocks. All right. If you have any questions, please please feel free to reach out to me on the Telegram channel. That's what it's there for. I'm here to help as many people as I can. If I don't have the information that you need or that you want to know, then I will find it. But most likely, I am going to know. Okay, I've been trading since 2015, and what I'm going to do is I'm going to teach you the opposite way that I've learned. I'm basically giving you a fast track so you can spend, 1 month of training, and then we go on, we can go hands on from here and there, just to see if you know where an imbalance is, where a order block is, where the target liquidity, you know what I'm saying? I want to make sure that you guys know all those things first before we, get into the actual charts, to learn how to see what I see and do what I do. You know what I'm saying? So, like, dang, son, this is like beautiful right here. Consolidation, boom, reversal. All right, so yeah, like you're gonna see it. You're going to see it. Okay. Um. Yeah. Once again, TradingView link is gonna be in the description. Um. The chat is in the description. So whenever you need, if you need something, let me know. All right. Until next time, be safe and happy trading. That was only an hour.